Hi, everybody. My name is Elnaz Mashari, and I am with group number 7 for this grouped project for Accounting 201. And in this presentation, we'll be taking a closer look into the differences and similarities of two well-known airlines with the goal of providing a solid recommendation of which company's stock to buy today. The airline companies in the comparison report are Delta Airlines versus American Airlines. But first, to clarify the definition of an airline, we can look to wikipedia.com. And according to Wikipedia, an airline is a company that provides air transport services for traveling passengers and freight. Airlines use aircraft to supply these services and may form partnerships or alliances with other airlines for code-share agreements in which they both offer and operate the same flight. And now that we have a better understanding of what an airline is, we can ask the question, how do these airlines make their money? And by comparing the two airlines, we can see that both provide global and regional air transport services for passengers and cargo, also known as freight. Cargo revenue includes revenue generated from cargo transport of any kind by an airline. In the comparison, we can also take note that while American Airlines passenger services account for the vast majority of their revenue, Delta Airlines generates extra revenue by operating an oil refinery business through their subsidiaries. Delta's oil refinery business serves the primary airline business by providing jet fuel. And we know that both airlines provide domestic and international flights. While comparing the two on the screen in this presentation, you will notice that American Airlines has more domestic flight hubs, but Delta Airlines has more international flight regions, including the Middle East, which is a big, big region overseas. Now, one of the more important comparisons from a consumer's perspective is each airline's loyalty program. And by comparing the two, you'll see Delta Airlines program is called Sky Miles. Members earn mileage credits by flying Delta, Delta Connection, and partner airlines. And for every dollar spent, members earn 5 mileage credits, and they have the opportunity to earn more through the different medallion status tiers, which include diamond, platinum, gold, and silver. Members also earn mileage credits by using other services, including an American Express co-branded credit card, hotel reservations, rideshare, car rentals, and select shopping and dining partners. An American Airlines loyalty program is called AAdvantage. And this program was actually named as the best elite program in the Americas for the 9th consecutive year in 2020. Members in this program also earn mileage credits by flying American Airlines or any One World Alliance airline and other partner airlines. For every dollar spent, members earn 5 mileage credits and also have the opportunity to earn more through different status levels, which include Gold, Platinum Pro, and Executive Platinum. Members also earn mileage credits by using the services of over 1,000 program participants, including Citi co-branded credit cards, hotels, car rental companies, and etc. In both cases, mileage credits can be redeemed for free travel upgrades, magazine subscriptions, and vacation packages. Now, to put the state of each company's financials into perspective, we can dig deeper into each airline's 2020 year-end financials based on their 10K reports on EDGAR. And looking at the two, you'll notice that Delta owned 507 and leased 153 aircrafts, with the average age of their aircrafts being 13 and a half years old. American Airlines owned 402 and leased 432 aircrafts, with the average age of their aircrafts being 10.8 years old. And if you look at the difference between their revenue and expenses, in 2020, Delta's operating revenue was roughly 17.1 million, while their 2020 operating expenses were 29.564 million. And American their revenue was 17.337 million, while their 2020 operating expenses were 27.758 million. With this comparison, if you look closer and compare the two, one can conclude that Delta having that's 174 fewer active planes, is not far behind in how much revenue they have generated in 2020. And they have accrued roughly the same in expenses. But overall, their revenue is fairly the same with many less active aircrafts in fleet. And next, to provide you with a little more relative industry news and brief analysis highlighting important issues relevant to stock performance, is Sachi Torres. Take it away, Sachi.
Okay, brief analysis on airlines, starting off with Delta Airlines. They continue to have a material adverse effect on their business. Due to the rapid spread of COVID-19, the longer the pandemic persists, the more material the ultimate effects are likely to be. COVID-19 negatively impacts their air travel, which affects their revenue. One of the reasons why is because their primary market is within the US. And of course, since we're still in the middle of a pandemic, the federal government has disencouraged traveling and is encouraging everyone to social distance at this time. If employees were to get exposed to the virus, they will be short on staff. The ability of their airport or in-flight employees to come to work may cause a further deterioration on their services or operations, which affects them badly. Future liquidity could also be negatively affected by the risk factors. If liquidity is materially diminished, Delta Airlines may not be able to pay its leases or debts on time. To continue with American Airlines now, due to COVID-19, the airline has suspended all non-essential hiring by approximately 30%. The global spread of COVID-19 has resulted in a severe decline in demand for air travel, which impacts the airline's business, operating results, financial conditions, and liquidity. About 20,000 team members opted out for paid leave, mostly for early retirement or for long-term partially paid leave. Liquidity could have a negative effect on the business if financial conditions were to worsen, provisions in their credit card processing or other commercial agreements may adversely affect their liquidity. Next, we have recent news, starting off with Delta Airlines. Delta Airlines is always disinfecting their airplanes before every flight. They block their middle seats, and they've also been committed to holding on flights when a cabin isn't properly cleaned. This just shows right here that Delta is taking COVID precautions seriously, which is great. By reducing the capacity of its flights, Delta is winning on being the safest airline to fly during this pandemic, and they continue as of this year to follow all safety rules. Delta has been losing quite some revenue, but in the long run, the outcome will be good for them because they earn their customers' trust and employees' trust as well. Delta Airlines, as in this year, has announced that their workers will either need to be vaccinated, or they have the option to pay an extra $200 per month for their health insurance. Even though people aren't on board with that, it is a good way though for everyone to stay safe. American Airlines, on the other hand, they have different procedures with their COVID safety rules. They do continue to sell their flights at full capacity, and they aren't blocking middle seats. This right here just shows that American Airlines isn't taking COVID health safety rules seriously, which is disappointing. They have been criticized several times by health officials for not taking COVID precautions seriously and for not enforcing social distancing policies. Health officials have also mentioned how the airline's decision-making was very disappointing and was not well thought. As in of this year, 2021, newly updated plans for American airline workers who are unvaccinated are going to take action by encouraging their workers to get the vaccine. But if an unvaccinated employee were to get exposed to COVID, they will have to use their own sick days to take that time off. This right here shows that American Airlines is finally moving to the right direction, which is a good thing.
Thank you so much, Sachi. And with that said, it is definitely a disappointment when any company, especially an airline, does not follow safety protocols for COVID. Thank you for sharing that information with us, Sachi. And next, to introduce a little more information about the stock closing prices, as well as price earning ratios, is Marissa Ruiz. Please take it away, Marissa.
Hi, I'm Marissa Ruiz, and I am part of Group 7, Delta versus American Airlines. I will be discussing stock prices and PE ratios. Stocks are used as a way for companies to raise capital to fund their operations. When companies sell stock, they're essentially inviting investors to purchase partial ownership in their company. When you buy shares of stock in a company, you do gain certain privileges such as voting rights and dividends. Owning shares of stock also gives you the potential to earn and share in the profits. When stock prices increase, you sell your shares of stock and you have the potential to earn a profit. Now, while stock prices have an overall history of a high return, they do also come with risk. It is entirely possible that when a stock prices can go down in value instead. Stock prices, of course, fluctuate for a variety of reasons. Recently, the airlines industry has seen this with the worldwide spread of the COVID-19 virus. Currently, Delta Airlines has a 10-day average stock price of $42.25 per share, and American Airlines has a 10-day average of $20.60 per share. Both are consistent with no major changes. Financial analysts are predicting that Delta Airlines will have an uptrend forecast of $43 to $63 per share in the upcoming 2022 year, with an average cost of $53 per share. American Airlines predictions are at a slight increase of $23 per share in 2022 for an average cost of $19 per share. Historically, Delta Airlines has had a 5-year average of $52 a share, while over the same time frame, American Airlines has had an average stock price of $38 per share. PE ratios are one way to gauge market expectations of a stock is to look at its price per earnings ratio. Financial analysts and individual investors use PE ratio to then determine the financial performance of a business entity when making investment choices. The price to earnings ratio is simply calculated by taking the latest stock closing price and dividing it by the most recent earnings per share price. Currently, Delta Airlines and American Airlines both have a negative earnings per share, thus resulting in a 0 PE ratio. Having the worldwide spread of the COVID-19 virus has adversely affected the airlines industry, and now with rising fuel costs. Historically, over a 5-year period, Delta has had a 7-to-13 PE ratio, and American Airlines has had a historical PE ratio of 6-to-18.
Thank you so much, Marissa, for that very useful information and for keeping track of the stock prices and the ratios and whatnot over the past few days. That is very informative and very much appreciated. Thank you very much. And next, we shall get into which stock we recommend as a group. And now that we have a better understanding of the state of the industry for each airline, we have a solid choice as to which airline we believe is the one to buy in today. And our recommended airline stock of the day award goes to Delta Airlines. And so why Delta Airlines? Well, Delta was in a better financial and operational position before the pandemic. While doing all of this research, Delta's transparency of their information and in their balance sheets on many different websites, many different resources was a lot more transparent. Delta has more potential to grow its revenue and income, and vaccination leads to a return to normal. And risks, we do know that risks continue to affect all airlines, but given the information we have, we believe risks will affect American Airlines more. And so go buy Delta stock today. Thank you for listening to our presentation and for taking the recommendation of buying Delta stock into consideration. Thank you and have a good day.